your buyers always kind of navigating and making sure that they understand to go through the process of shopping lenders, right? But could you elaborate on why you do that?
Absolutely. Great question. So I do it for a few reasons. One is that different lenders are going to have different products, programs, and then overlays. So for example, you may be a business owner, and some lenders may look at your income and they're like, hey, the loan is too risky for us. Or they may look at your debt to income ratio and say, it's too high for us, right? But it's not too high for the loan product. It's just too high for them to feel confidently in taking on that loan product. So they just won't do it. So I do it for that reason. Also do it for the benefit of just shopping interest rates, right? Because when you actually force lenders to compete, they prepare to compete, just like the podcast says, right? Because if you only get one lender that you're working with and they tell you this is the interest rate and you don't shop around, well, they may have not gave you the best that they could, right? Because ultimately, I mean, they have a job to do. They're trying to make as much money for their companies as they can as well. And it couldn't even, it's not even just your particular lender. You got to understand it's a whole corporation, right? So once you actually say you have a lower rate from a competitor, then now they can go into their supervisor and say, hey, we're going to potentially lose this client. Is there anything else we can do to keep them, right? And they'll try to go through the motions and do whatever they can. So you might enter that scenario where, one lender told you 7%, and then the other one said 6.5, and then you go back, and then, the 7% say I could do 6, and it's like, do I got 5? And now it's like a whole bidding war for your business. So that's another reason why you want to do that. And then oftentimes the third reason, it gets a little bit more complex, is that there's different types of lenders, right? So you have lenders like your Wells Fargo's, right, and your even Navy Federals, which is a small community bank. They have their different risk levels, right? And then you have regular brokers, right, which is very good to work with the broker a lot of times because they're shopping your loan with their different companies that they work with, right? So if you go to a broker, they're pretty much going to shop you around to 3 to 5 different providers anyway. So I usually tell my clients to go to a broker, to go to a credit union, just a regular credit union, local credit union, and then also look at like your Navy Federal as well, credit union, because they usually have a lot of favorable programs and rates as well. But then if you have like a particular lender that works for a particular company, shop them in there. But the main two that I want to make sure that you pursue is going to a credit union, any credit union, and going with the actual mortgage broker. So you want to ask your lender, like, hey, are you a broker? Are you shopping my loan for the best rate? Or is it just your company doing in-house financing? Because some companies do the in-house financing themselves, and then, they might sell it off or whatever, but they actually fund the loans themselves. So now they could have less overlays and they have more creativity on things that they can do because they can get the loan closed and they actually worry about selling it after closing.
Okay. Yeah. So basically what we're saying is that, or what you're saying is mainly make sure we shop around for lenders, but sounds like one major corporation, broker, and more or less almost a credit union or local bank to kind of be able to get the best products.
Absolutely. Those are going to be your 3 tiers that you want to go to. And, again, they're going to have different options. You want to definitely like and respect the institution that you're working with, but also it's normally a lot of times the individual relationship, right?
True.
Sometimes with certain credit unions and big banks, it makes it harder to build that relationship, but it's not impossible. You have big corporations where they have great representatives where you build a rapport with them and they go to bat for you and make sure you get your loan funded. So you just want to talk to them and see what's going on. Absolutely, Kenneth. I appreciate all the questions, and I definitely want to elaborate on the point of how important it is to really build those relationships.